Going to record. So welcome everyone to our financial check-in with FAME. It's the first Friday of the month, and this is actually the last of our spring series. So we will take the summer off, but we will come back and start offering our financial check-ins this fall. The plan will be that we will offer them October, November, and December. So today's financial check-in is Managing Student Loan Repayment. And my name is Martha Johnston. I'm the Director of Education. And on screen, you also see Mary Dyer, who's our Financial Education Officer. So feel free to drop your questions in the chat as we go through this, and I'll do my very best to answer them as we go along. Take a pause, take a breath, so you can hear the work going on at my house, and Mary will let me know if you have any questions. So there we go. So I think it's important that we put the picture of the pie there. I actually chose my favorite, which is key lime pie. Lately at FAME, we've been talking about paying for education as a pie, and when there's many slices, they don't have to be so big. Well, I think that's a really good analogy when we talk about student loan repayment. There are so many different things available to borrowers when they're paying back their student loans. And if they make sure that they know what those different options are, each slice or each option doesn't have to necessarily be big, but it will help pay off the whole. So that's the deal with the pie. You'll see the theme throughout today's presentation. So we will start talking by getting your financial house in order. And maybe that's what you weren't expecting, but everything we're doing at FAME these days seems to have financial education running right through it and financial capability. And we actually think that's a really good thing. So we're going to talk about getting your financial house in order as part of managing student loan repayment. We'll talk a little bit about student loan consolidation, talk about federal student loan forgiveness. We will talk about student loan repayment programs and what those are, education tax benefits. It wouldn't be a presentation if we didn't talk about the COVID-19 impact that currently exists for student loan borrowers. And then we certainly will talk about more resources that are available. And as always, we welcome any of your feedback, questions, feedback, anything we could do to make the presentation even better for the future. So with that, let's get started. So getting your financial house in order, I think Mary would be a huge advocate. It's really intimidating to present in front of her on this slide because this is what she lives, sleeps, eats, and breathes every day. So, but I highly recommend figuring out what your money personality is. Before you start to try to manage money, you might want to learn something about yourself. So I am absolutely in love with understanding your money personality, which is part of Enrich. And we've provided the website here. Enrich is a digital platform available to you through FAME. And you can actually go on and take that test and figure out what are your attitudes about money, maybe that you never even realized you had. I have two recent college graduates, and I did decide to let them get settled in during the month of May, but pretty soon I'll be sitting down and we'll be doing their money personality together. Getting organized, it's incredibly important. For any of you who are former financial aid people, and I saw a few of you come in as participants, you know that one of the reasons people default on their student loans is they possibly lost track of their student loans. So getting organized, knowing where your loans are, that's incredibly important. In addition to money management, money personality, getting organized, identify your spending leaks. You can't possibly manage your student loan repayment if you've got money spending leaks that otherwise, if you plugged up those spending leaks, that would really help you maybe even put together a plan to pay off those loans sooner. So I think it's always important to take a look at your budget. Now that I'm done paying tuition, I'm examining my budget again, and there are plenty of spending leaks that I think I can seal up here. So make your own coffee, get overdraft protection, recognize any kind of impulse buying, and retail therapy, want versus need. That's a big topic in my household with my daughter. Don't tell her, but we'll be talking about that a lot too. Create a spending plan and evaluate it regularly. I really love the term spending plan and not budget. Budget is almost a dirty word. It's almost like diet, right? I'd rather say, what's your eating plan? What's your nutritional plan? And the same with the spending plan. We all have to spend money. So let's talk about the best way to organize how we spend money. Reducing expenses, that's a big part of it as well, because every bit adds up. So can you reduce your food costs by making meals at home? We certainly saw over these last 15 months, many of us cooking at home more frequently and more often. And I'm not exactly sure I want to go back out to eating in restaurants as often as I was, because I really enjoyed what I've learned through cooking more and what I could do with leftovers even. Cell phone, internet, and cable. So I'm making fun of myself. Does anyone still have cable? I still have cable. That's probably a spending leak. And my kids tell me that I should get rid of cable. Just go with Roku, go with streaming. You don't need anything else. But I haven't cut the cord yet. And then certainly travel expenses, credit card points. Could you walk? Could you bike? So just think creatively. And there could be a lot of other great things that come from that. And then also look for free banking, especially if this is a young person who's just entering student loan repayment, or even not, maybe someone who's finished their master's degree, doctorate. When you start to manage your student loans, it really is a good time to start looking at your entire spending plan and how you want to achieve your other financial goals in the context of paying back your student loans. And probably one of the most important things is taking control of your debt. Obviously, student loans are in the media all the time. We hear people talk about it. But the fact of the matter is, the choices that you make can really help you achieve some of those goals. So taking control of other debt that you might have, including making a plan for your student loan debt, is incredibly important. So we always make sure people understand to avoid the minimum payment trap. Obviously, spend only what you can afford to pay off on your credit card, pay off your higher credit cards first. And I would say probably this last bullet is one of my favorites, which is snowballing. So basically, snowballing, you pay off your lowest balance first, and then you use the freed up money to make a bigger payment on the next debt that you want to pay off. Now, I realize that might not necessarily be the order that you want to do things if you're trying to pay off higher interest rate debt first. But when you snowball, it gives you a sense of accomplishment, right? Once you've paid off one debt, even if it wasn't the highest interest rate debt, psychologically you think, okay, that feels good. It freed up cash flow. Now I can make a higher payment on maybe a higher interest rate debt that I'm trying to get rid of. So I really love the concept of snowballing. And then last but not least, emergency savings. I think no matter who you are, where you are in your life, at what stage in your life, it's always good to evaluate where you have your emergency savings. And I've been talking about this a lot with my own kids, right? The difference between emergency savings and investments. You know, my daughter might say, oh, well, I can just take it out of XYZ. And I say, no, actually, that's a long-term savings. You're not taking anything out of there. So if you need something that's an emergency, like tires for your car, you need to have an emergency spending account. So again, these are lots of lessons that will be circulating through my own household between now and when she moves out on July 1st. So I don't have a lot of time to get those lessons in. So federal student loan consolidation, a lot of people will use student loan consolidation as part of how they manage student loan repayment. So I just want to make sure people are very clear what student loan consolidation is. It's not actually refinancing, and so that's really important. It's federal student loan consolidation, which basically means that you're taking all your federal student loans and you're combining them into one brand new consolidation loan. And the interest rate that you're getting on that loan is actually a weighted average of all the interest rates being brought into the consolidation. So if you look at the graphic on the screen, you can see one loan's coming in with a $20,000 balance and a 6% interest rate, one loan at $5,000 at an 8% interest rate, and then yet a third loan at $6,500 with a 5% interest rate. When you combine the weighted average of all those loans, you're going to have an interest rate that leans more heavily toward that $20,000 balance, because that's the biggest chunk of your loans. That's where your weight is, if you will. So the weighted average on the interest rate for a federal consolidation for these loans is 6.1%. Refinancing is a little different. Refinancing you use to pay off loans. It's a brand new loan, but it's possibly a brand new interest rate, a brand new repayment term. And it's not something that you would bring your federal student loans into lightly. And we'll talk about that a little later. So I just provide this graphic because I think it's really important for people to weigh the pros and cons of consolidating your federal student loans. Part of the management piece is to have one payment. Remember, we said earlier that sometimes people default on their loans because they've lost track of their loans. So federal consolidation allows you to have one federal student loan with one payment, and that might help you stay organized and get your loans paid off. And there's no prepayment penalty. So certainly you could also accelerate how fast you pay off those loans. It is a fixed interest rate, and a lot of people find that very beneficial. There are many repayment plans within federal consolidation loans, so that's actually a very good thing. And then there's also deferment options, just like when you had those federal student loans on their own before the consolidation. The bad thing is that if you did have some older federal student loans that had benefits, those benefits are gone when you take them into a federal consolidation. I love this next one, no do-overs. Basically, you can only consolidate once. You can't reconsolidate a consolidation loan unless, there's always a caveat, unless you have another federal student loan outstanding that you could bring in at that time. So in that case, you would be reconsolidating a consolidation loan, a federal consolidation loan, and you'd be bringing in another federal student loan. I think probably the easiest way to imagine that is think about you consolidated all of your undergraduate student loans, and then you went back to school and took out a direct loan for your master's degree. You could reconsolidate the consolidation loan and the new loan that you took out for your master's degree. So that's the best way to illustrate that. Again, if you had some older loans, you would lose lender benefits when you go into a federal consolidation because the new lender on that loan is the federal government. And then you can't take a private student loan into a federal student loan consolidation. Now you can oftentimes take federal student loans into a private refinance. And again, we would really advise people move cautiously if they were looking at doing something like that. And we'll talk about that a little bit more later. So federal student loan forgiveness. So I'm going to spend a little bit of time talking about public service loan forgiveness. It's obviously a very hot topic. It's gotten more attention in the media. Unfortunately, it wasn't always great attention because when the first batch of eligible borrowers came through for public student loan forgiveness, there was a little bit of, what should we say, a kerfuffle with paperwork and people being declined, and it got a lot of bad press. But then there was also temporary extensions that were granted by the Department of Education so that people could make sure they got that paperwork and see whether or not they did in fact qualify for public service loan forgiveness. Having said that, I'm going to talk about it more as if someone's about to go into repayment and they do need to understand what public service loan forgiveness is. So you make 120 qualifying education loan payments under a qualifying repayment plan while you're working for a qualifying employer, which that's a lot of qualifications. So I've provided on this slide a website to studentaid.gov that would allow you to actually do a loan simulator. And it's actually a very, very interesting tool that you can go in and put in what your goals are, whether or not you think you'll be working at a qualifying employer. And the simulator will tell you approximately what it believes you could qualify for in forgiveness. So I'll give you an example that I just did recently. I put in $27,000 of federal student loans for someone who's making $40,000 a year. They go into an income-driven repayment plan and they make an assumption about maybe having a 3% raise every year. At the end of 10 years, that borrower theoretically could qualify for $9,000 in public service loan forgiveness. So it just helps you wrap your brain around whether or not that's something you should be looking at from the financial perspective. But then of course, the bigger thing is whether or not you'll be in one of those qualifying situations. And probably the primary thing is the employer. So it doesn't matter what work you do, but it's who you work for. So if you work for a government organization at any level, federal, state, local, or tribal, if you work for a nonprofit organization, so they're tax exempt under Section 501c3 of the Internal Revenue Code, other types of not-for-profit organizations that are not tax exempt, if their primary purpose is to provide certain types of qualifying public service, and then serving full-time as AmeriCorps and Peace Corps. So that might sound kind of complicated, but one of the best examples I can give you is FAME. We're actually not a 501c3. We're technically not a state entity. We're an independent state agency, but working at FAME is the type of employer that you could qualify for public service loan forgiveness. So that's just a good example of an organization that's not a 501c3, but would qualify for public service loan forgiveness if you work there. You should actually complete and submit your employment certification for public service loan forgiveness annually and whenever you change jobs. So that's just a really good and important habit to get into, especially since we did see a lot of confusion when people first started to put in for their actual forgiveness after 10 years of repayment. So I think it's important to learn as much as you can upfront and then monitor and stay on top of that. So qualifying payments are basically payments that are made by you after October 1st, 2007. That's when the program commenced, and for the full amount due as shown on your bill. During COVID, that's kind of interesting because no one has any payments due right now. So you think to yourself, are those qualifying payments? And in fact, they are. So that's actually good information to have as well. And then you have to make those payments no later than 15 days after the due date. Again, this is all about defining what a qualifying education loan payment is. Qualifying monthly payments can only be made during periods when you're required to make a payment. Therefore, you can't make a qualifying payment while your loans are either in school status, in grace period, deferment, or forbearance. But remember what I just said about COVID. So you have monthly payments due. It's just that the amount due right now is 0. So you're all good. And those are counted as qualifying payments right now during COVID. So I think that's a bit of good news in an otherwise challenging year on a lot of levels. You also have to be in a qualifying repayment plan. And so that's an income-driven repayment plan. And it sets your monthly student loan payment at an amount that's intended to be affordable based on your income and your family size. And there are 4 different income-driven repayment plans. What I think is really interesting about income-driven repayment plans and public service loan forgiveness, and I don't think people would automatically connect the dots, and why would they? That's why you're attending this session, and we're going to tell you about this. But you often think about public service loan forgiveness. If you're paying off your loans with an income-driven repayment plan, and then you really start to accelerate how much you make, and you are in a higher wage job, but maybe you're working at a nonprofit, it is quite possible that at the end of 10 years, at the end of 120 payments, you did successfully pay off your loans. So I think that's a really interesting element around public service loan forgiveness. And here's the example I'll use. I'll go back to using a hospital example. So if you're a physician, and maybe let's just say you're a surgeon, so you're making, a very high salary, but you're working at a 501c3 in the form of your hospital, you're in an income-driven repayment plan, that each year your payment maybe goes up because your income is going up. Then at the end of 10 years, it's quite possible that you don't have public service loan forgiveness because you've paid off your loans. That might not be a great example because doctors usually graduate with a lot of debt, but maybe there's just not as much to forgive as you might have thought there would be. And again, it has to do with that income-driven repayment plan. So hopefully that makes sense. The different type of income-driven repayment plans, I just put this on here for you to have. I'm not going to go through them. It can get kind of confusing, but I wanted to give you a sense of how they're calculated. So the one that I'll point out, I'll use IBR, which is income-based repayment. So generally it's 10% of your discretionary income if you're a new borrower after July 1st, 2014, but never more than the 10-year standard repayment plan amount. So that's your monthly payment. It's equal to 10% of your discretionary income if you're a new borrower after 2014, but never more than what your payment would have been if you had just done a standard 10-year repayment. And then generally speaking, 15% of your discretionary income if you are a new borrower on or after 2014. Sorry. Wait, I think I've got a typo there. I'm going to have to fix that for you. But you get what we're saying. It's basically a percentage of your discretionary income. That's what an income-driven repayment plan is. So again, this is just meant to give you an idea of how that gets calculated, and it depends on which income-driven repayment plan you actually pursue. I did actually put in a couple of links. Again, Mary will share any links, and certainly we will actually also provide a copy of this presentation for you to have. Studentaid.gov actually does a really great job, again, not only with that simulator. I put the link in a second time because I'm so impressed with that student loan repayment simulator, but they also really do a great job with public service loan forgiveness information, and their Q&A in particular is very thorough. So if you have more questions about public service loan forgiveness, I highly recommend that you go visit that website. Again, income-driven repayment plans, this is a little bit different because what I want to illustrate here is that in addition to federal public service loan forgiveness, there are actually other types of federal student loan forgiveness. If you're in an income-driven repayment plan, if at the end of that repayment period, you still have money left over to repay, it will be forgiven. So for instance, if you're in the repay plan, revised pay as you earn, your payment is 10% of your discretionary income. and then you receive loan forgiveness after 20 or 25 years of qualifying repayment. So I think a lot of people focus on public service loan forgiveness, and they think that's the only type of federal loan forgiveness that's out there, but that's actually not the case. One thing that I do want to say, and it's probably on another slide in just a couple minutes, but public service loan forgiveness is actually not taxable. So that's a really good thing. These other forms of federal student loan forgiveness had been taxable, but most recently, with some of the COVID relief packages that had been passed, these are also non-taxable, but only non-taxable if the forgiveness happens before January 1st, 2026. The reason I'm taking the time to explain it to you is because there are a lot of people in Washington that think that because this type of forgiveness became non-taxable between now and 2026, January 1st, 2026, they think that's a really good sign that it might be non-taxable going forward after 2026. I can't predict, I don't have a crystal ball, but I think a lot of people are hoping that it set a precedent. So that's why I'm taking the time to explain that to you today. So I do want to talk a little bit about the elephant in the room. And the elephant in the room is that since the presidential primaries last year, everyone was talking about student loan forgiveness and should there just be blanket student loan forgiveness. So I didn't think I could do a presentation about student loan repayment or managing student loan repayment if I didn't mention the elephant in the room. And the fact of the matter is, we don't know what's going to happen. There was a time there I thought for sure, I think there will be some loan forgiveness. Now I'm not as sure. I would say the chatter about it has quieted down a bit. I don't believe that doesn't mean that it's not going to happen. I just think that there are other priorities that are being addressed by the current presidential administration, but I think there are enough advocates that this issue is not going to be forgotten, obviously, and there'll be plenty of people advocating for it to happen. The way it happens and the amount of forgiveness available, I think that's a very, very broad spectrum. You might see that it's a smaller amount, maybe not in forgiving the entire amount of federal student loan debt, or maybe there's a need-based component attached to it. So I think any manner of forgiveness that's proposed in the future, we don't know, it could happen. But I think it's really important as people talk about how to manage their student loan repayment that they are aware that this is happening, but I wouldn't put all my planning based on it happening. So I think that's what's really important. I work with a physical therapist, a young person who basically has a little bit of a windfall. And he's like, should I use it to pay off my student loans, or should I wait to see if there's going to be loan forgiveness from the new presidential administration? The way I spoke about it with him was, well, you don't have any payments due right now because of COVID. So that's bought you a little bit of time. So why don't you just keep your ear close to the ground and pay attention to this public policy issue? And then as you get farther along, you'll probably know what you want to do. But I don't think I would count on complete loan forgiveness if I were a betting person. So student loan repayment programs, different than student loan forgiveness programs. I've been talking about this a lot lately with people. Basically, a forgiveness program, you take out the loan, you get your education, and then for whatever reason, you qualify for forgiveness. Sometimes there's a forgiveness in exchange for service, like the Educators for Maine program is a program that we administer. Somebody becomes a teacher and they come back and provide return service in Maine, and then we forgive a loan, a part of their loan for each year of return service they provide. Student loan repayment is a little different. Student loan repayment, nobody made that promise to you up front, but they have said instead, if you come wherever I'm asking you to come to, I will provide student loan repayment in exchange for service. So that's why we've got the little graphic there of the handshake. So the payments are made on your student loan by a third party in exchange for a service or a work commitment. The most common type of loan repayment that many of you may have heard of, or some of you may have heard of, usually has to do with healthcare professionals. So FAME certainly has a program called dental loan repayment. So the way I like to think of it is You are from California, you became a dentist, you've always been from California, you went to dental school in California, but now I've attracted you to come to Maine because you qualify for dental loan repayment, but you need to work in Maine in an underserved area. So that's a great way to illustrate what loan repayment programs look like. As I mentioned previously, a lot of them are affiliated with healthcare professions. And so I did provide the information here in case either you or someone you know is working in a healthcare setting that could qualify. So the federal programs are through the Health Resources and Services Administration. You've probably heard of the National Health Service Corps. It's often referred to that in that way. There are also state loan repayment programs. The acronym is SLRP, so it's not really a great acronym, is it? But state loan repayment programs are kind of interesting. They're a matching program, so it's federal funds provided to states, and the states match those funds. So the first link, or I should say the link in the middle of the page for state loan repayment, is a listing for all the states and the different state loan repayment programs. And then the bottom link is to the Maine state loan repayment program, and that's essentially for primary care physicians. So that's just some additional information I'd like. Mary, did you raise your hand?
I did. We had a question come through in the chat, Martha, regarding loan forgiveness. And the question was about who a borrower should contact first if they suspect that they may be eligible for forgiveness. And you may have already addressed that, but if you could touch on that as well, that would be great.
Yeah, so if somebody thinks they might be eligible for forgiveness, I guess I would say the first thing I would do, it depends on where they're at in repayment. So for instance, if they are they're newly going into repayment and they want to make sure they set themselves up to maybe dot all their I's and cross all their T's, I would start first by, if it's public service loan forgiveness, I would start first by combing through that public service loan forgiveness website and the Q&A, because that is very good. And then I would call the Direct Loan Servicing Center. So whoever's servicing your federal student loans, I would take the time to call them and have a conversation, make sure you have all your questions lined up. What I would caution against, I would maybe call them now while things are quiet because no payments are due because of COVID. But I do think the fall, come October 1st, is probably going to be a very crazy busy time for direct loan servicers. And that's because all the loans are going to be coming back into repayment. So I mention that because I would do your research and you're calling now, or I would do it after January, because I do think the period from October 1st until January, that 3 months that millions of borrowers are coming back into repayment, will just be logistically a very difficult time to get a hold of a servicer. The other thing you can do, you can always give FAME a call if you have other questions or you're not sure where to start, and we can communicate with you either over the phone or send a more detailed email to give you some ideas of the questions or the links that you really want to pursue when it comes to looking for loan forgiveness. Okay. Taxability of loan repayment awards. So you heard me talk about taxability of loan forgiveness, but there is also taxability related to loan repayment. In general, you can go to the IRS publication 970 for any education tax benefit information at the federal level, but loan repayment assistance is not typically taxable if it is in exchange for healthcare professional work because of shortage areas in healthcare. So that's a good thing. The bad thing is if you happen to qualify for some other type of loan repayment program, maybe a philanthropic program, then the payment made on your behalf becomes taxable to you. The best example I can give is a program that we administer here at FAME, and it's called the Alphon Leaders Program. It's a really fabulous program. So don't let me let you believe that it's not a great program just because it has a tax element to it. But you can qualify for student loan repayment in exchange for being a STEM professional living and working in Maine. That's really wonderful. And it's up to $60,000 depending on how much you qualify for. We just made our first payments last summer to people after a 3-year service commitment in STEM. And so those people were issued 1099s this past January. So when they filed their 2020 federal tax return, the amount of their loan repayment was taxable. So again, that was because it's not a healthcare professional. Right now, that carve out exists in the federal tax code, but not for other professions that we've seen. And we did do that research because, of course, we were hoping it wouldn't be taxable for those borrowers. So you heard me mention Alphon leaders as an example of taxability, but again, I don't want that to take away from the fact that it's a really wonderful program and it's funded by the Harold Alphon Foundation. You get up to $60,000 in student debt reduction, and you have to be a STEM professional living and working in Maine. That actually is a program that's been running since 2017. There is not an unlimited amount of funding for that program. So I usually tell people to check our website every February and again every September, and then we will publish on our website if there's a new application cycle. So come back to our website, faymaine.com or alphonleaders.org, September 1st, September 15th, and we will tell you if there's going to be an application cycle this fall. I do list it here as an example. It's a philanthropic example of student loan repayment. So wherever you are, everyone here is probably from Maine, but you might have people in your life that live elsewhere through the nation. It can't hurt to research if these type of loan repayment programs are in their area, because maybe they live in an area that needs a certain type of worker. And so maybe a philanthropy has started a program like the Alphons have. And then last but not least, you should find out whether or not your employer offers any kind of education repayment benefit, student loan repayment benefit. It could be part of a hiring package. It really can't hurt to ask. A lot of employers are struggling to find the workforce that they need, and I wouldn't be surprised if they're adding this benefit. What's really nice, and again, this was part of the COVID relief package that came over a year ago, but an employer can pay up to $5,250 in repayment on behalf of their employee, and it's non-taxable to the employee. And that's again before January 1st, 2026. You're probably picking up on a theme here. 2026 became a marker for some of these COVID relief items. But again, $5,250, every bit adds up. It goes back to that pie analogy, right? $5,250 might not cover all of it, but it could cover a nice chunk of it. So don't be afraid to ask your employer. So what about other education tax benefits? Well, again, we go back to the pie analogy. I know you'll be tired of it, but just remember, every slice, if there's a lot of slices, they don't have to be so big. And so the first thing we want to tell people about are tax credits. So what are tax credits? Well, basically, they reduce the amount of tax that you pay, and they're a dollar for dollar reduction. So they're a very rich benefit. So if you can ever get a tax credit, that's very, very good. So an example would be you owe $5,000 in taxes, you qualify for a $2,000 credit. Now you only owe $3,000 in taxes. So that's really great. That's real money that you didn't have to pay. Now you might think, well, that didn't go directly to my student loan. But again, every bit adds up. I would not snub my nose at any opportunity. Sometimes tax credits can be refundable, which basically means if you actually have a tax credit for more than what you owe in taxes, the difference actually becomes a tax refund to you. So that's an incredible tax credit. I take the time to define all of that because guess what? Maine has an incredible tax credit. It's called the Educational Opportunity Tax Credit. Many of you have heard of it as Opportunity Maine. Now, this is just for your state taxes. It's not based upon your federal taxes, but the credit amount that you can receive is based on your year of graduation, the type of degree, and the student loan payments that you made. And it's real money. So for a bachelor's degree, it's up to $44.04 in a tax credit. So a dollar for dollar reduction in how much tax you pay. Graduate degree, almost up to $4,100, so $4,092. You apply annually when you file your Maine state tax return. Live and Work in Maine has done a really fabulous job putting together a graphic that describes the program. That might sound a little dull, like why is she saying that? Well, because the program was a little complicated when it first rolled out, and it's changed over the years. So the graphic is really helpful for determining what portion of the credit you qualify for based on when you graduated and all that information. I will say Maine Revenue does a really good job with their frequently asked questions page. So I provided a link to that. And then, as I mentioned before, Live and Work in Maine did a fabulous graphic. And I just put up a screenshot so you could see it did get a little complicated. It rolled out in 2008, then it changed a little bit, 2013 to 2014, changed again in 2015. So it definitely is worth time going to the Live and Work in Maine website and understanding the tax credit. You can actually file up to 3 years back. So if you were not aware of this tax credit, you can go back and amend your tax return with the state of Maine up to 3 years previous. And I believe you can carry forward the unused credit up to 10 years. And so this is real money. And if you're a STEM professional or STEM major, if you're a STEM major, then it's a refundable tax credit to you. So, you know, this is real money. And as a matter of fact, my son just graduated. He's a STEM major. And I said, okay, you're going to be making your student loan payments so that you can get your Opportunity Maine tax credit because he's still living in Maine. So again, it's a good thing, and every bit helps. What about tax deductions? I think these probably aren't as exciting after I've told you about the dollar for dollar reduction of a tax credit, but a tax deduction is also really important, and it reduces the amount of taxable income that you have. So it ultimately could reduce the amount of tax that you pay. So the federal student loan interest deduction exists for up to $2,500 for interest paid on a qualifying student loan. And the deduction does have different income limits. I will say the IRS publication 970 is actually not a bad publication. If you use the PDF version, you can navigate very easily to the section that you want to look at. Otherwise, it does look like a little bit of an overwhelming publication, but there's a lot of great information in there about the tax deduction related to student loan interest repayment. So I highly recommend looking at that. So COVID-19 and the impact on student loan borrowers. Obviously, I'm very hopeful that this presentation in the future will never have another mention of COVID-19 again. But we couldn't do a presentation today without mentioning what borrowers are currently experiencing. So federally held student loans. What is the status of federally held student loans? The interest was reduced to 0 on all federally held. Think of federally held as the same thing as owned by the government. For loans from March 13th of 2020, I should correct that, March 13th of 2020 to September 30th of 2021. And this applies to both currently enrolled students and borrowers in repayment. So again, March 13th, 2020 through September 30th this year, 2021, there's been 0% interest on all your federally held student loans. Payments have been suspended on all federally held student loans. And again, from March 13th, 2020 till September 30th, 2021. This does include parent loans if those loans are federally held. I say that because if you're a parent who has a loan from many moons ago, let's say 2008, you probably borrowed your loan from a private lender that was part of the federal family education loan program. So those loans might not be federally held. But again, studentaid.gov has done a very good job with their website, and they've been very, very good about staying up to date very quickly on all the coronavirus announcements related to student loan borrowers. So which loans are federally held? Student loans, all direct loans are federally held by the U.S. Department of Education, and they're loans that were borrowed after July 1st, 2010. Some federal family education loans and some federal Perkins loans are also federally held, but some older loans are what we call commercially held. And that was the example that I was talking about on the previous slide. So if you have a PLUS loan and say that PLUS loan was from 2007, 2008, you may have borrowed that through a private lender, and that lender could still commercially hold your federal student loan. It was just the way the program was structured back then. So when it came time to do the 0%, during COVID or to suspend the payments, the federal government doesn't have any control necessarily over a commercially held loan. So that's why they couldn't apply that standard to a loan made by a lender, but they could only do it for the loans that they own. So to determine if you have a FFEL loan, especially if you have a PLUS or Perkins loan that are federally held, you can actually go to studentaid.gov. You'd use your FSA ID, and you could check the lender on the loan. If you've never created an FSA ID username and password, you can start by clicking on create an account. And it's actually a really good thing to do. You can contact the servicer that's listed, and then you can also call Federal Student Aid Information Center if you have questions. But I definitely think it's worth pursuing, even if it's just to make sure that you get reacquainted. It could be that you've been getting 0% interest this whole time and maybe didn't realize it, and that's a pretty wonderful thing. So I probably shouldn't say this because it's being recorded, but I have gone into FSA with my son's ID so I could look at his student loan, but only so I could do this presentation for all of you. So it's not a bad site to navigate at all. So I highly recommend going in there if you haven't done it already. Actually, and I would say too, it's just a really good habit to get in there as part of that very first slide we talked about, getting organized. So get into FSA, get into studentaid.gov with your FSA ID, make sure you know where all your federal loans are, who the servicers are, what the contact information is. It's just a really good habit to get into. So some more information regarding pandemic relief in general, studentaidpandemic.org is actually a really fabulous website created by a woman that Mary and I know very well out of Massachusetts. She runs, oh Mary, what is it? The student TISLA.
Sorry, I had to unmute myself. It's the Institute for Student Loan
Advice?
I think so, yes.
I think it is TISLA, the Institute for Student Loan Advice. She is, the organization is completely nonprofit. It is not funded by any advertising. It's completely neutral advice. And so this person is very talented, very dedicated, and she worked in student loan compliance for years. So she knows what she's talking about. And if you want additional advice, I definitely recommend visiting her website or even contacting her directly if you think you have an interesting situation. And of course, you could always contact us as well at FAME. And again, I'll just say one more time that studentaid.gov has actually done a very good job with their announcements related to coronavirus. And they've been very good about keeping that updated over these last 15 months. So student loan refinance and other resources, I think that this is also part of managing student loan repayment. Obviously, consolidation, maybe you wanted to get organized and get all your payments into one place. You wanted to simplify, you wanted to maybe free up cash flow. Lots of reasons why you might want to do that. Student loan refinancing is very similar, right? We talked about that a little bit at the very beginning. Consolidation is usually referred to the federal program, combine all the loans together, a weighted average of the interest rates. You can't bring a private student loan into a federal consolidation loan. Refinancing is different. The benefits of refinancing would be that you could reduce your overall cost of your higher education debt. Maybe you reduce your financial stress, again, because you're bringing all your payments into one new place. Maybe this is what allows you to live and work in Maine, because maybe it's the quality of life that you seek, but you needed to free up some cash flow to make your spending plan work. Or you have other goals that you want to pursue, paying off other higher rate debt, you want to save for a home, or perhaps you want to start your own business. So refinancing can be an effective tool. I just caution you again, if you think you want to take your federal student loans and bring them into a private refinance education loan, that's something that you just have to do with a lot of information to make sure that it's the right decision for you, because you do let go of a lot of federal benefits. So I'm not necessarily recommending it, and I'm not telling you that you shouldn't do it. Only you can figure out whether or not it meets your financial goals. But one thing to consider, of course, is you could refinance your private student loans if you have private student loans and pursue all these same great benefits from refinancing and keep your federal student loans still separate and in a federal consolidation loan. And so the win-win there is that you still only do have two loans. Overall, refinancing student loans is a more manageable student loan repayment, not just a more manageable payment amount, but that certainly can be part of it. A lot of people like to refinance their private education loans because they want to have a fixed rate. Maybe when they borrowed a private education loan, they got a variable rate. Maybe they got a fixed rate, but now their interest rates have gone down, so they want to get a reduction in their interest rate. So that's another reason people will often refinance. Many times it has to do with cash flow, so they want to have a lower monthly payment, or they do want to have a shorter repayment term, or maybe they even want to have a longer repayment term. Again, I'm not advocating that you take on more debt for a longer period of time, but if it helps you meet your other financial goals, then it's definitely something that you have to consider when you put together your plan for managing your student loan repayment. And you can always prepay without penalty. So if you're very disciplined, you could go out, get a smaller monthly payment, and then once you feel like your cash flow is in a better place, you can make higher payments on those loans. So again, it's your overall plan, and remember the pie. The more pieces there are, the smaller they can be, and all of those things will add up. The loanforme.com is actually a website created by Fame. We will actually work with Maine lenders to provide loan insurance so that those Maine lenders will feel like they can make private student loans or refinance loans for Maine people. We wanted to make sure Maine people had Maine options, but I think what's most important is that we wanted to make sure people had good information so that they could make very informed borrowing choices, especially when it came to having local Maine options. So you can always go out to the loanforme.com just as an information resource. We have videos, we have other tools and calculators, and we give you the list of things that you want to consider when you're choosing a lender, or the things to consider before you contemplate refinancing or consolidating. And again, we would tell you, if you're thinking about bringing federal student loans into a private refinance, you have to do that very, very cautiously. And maybe the best thing to do is to keep those separate, federal on one side, private on the other. If you're pursuing public service loan forgiveness, be sure not to include your federal direct loans in a private education loan refinancing. So you've already heard me caution about that multiple times. But if you're doing public service loan forgiveness, you want to keep those federal student loans separate. So that is probably the most important piece of information to hang on to. Beware of student loan debt relief offers and credit repair deals, especially during COVID-19. It's unfortunate, but a lot of people saw an opportunity to maximize an opportunity to make a quick buck by providing these debt relief offers and credit repair deals. I can guarantee that if you have a question, come to Fame and we will point you in the right direction if we do not know the answer to that question, or we will point you to TISLA. We'll point you to the Institute for Student Loan Advice. Again, neutral, free source of information. You do not have to pay for this. Student loan debt relief companies do charge fees for your services, and remember, you can get those services for free. And then you can always contact Fame or your loan servicer for help too. And again, just kind of remember, October 1st, millions of borrowers are about to go back into repayment. So I do think it could get a little dicey in October. So do your research now during the summer while it's rather quiet for them, or give them a little bit of time to get back on their feet and contact them after the holidays. That's my big caution about millions of borrowers going into repayment. And then last but not least, we want to make sure that you have resources for successful student loan repayment. Obviously, you can visit famemaine.com, and we have a wealth of information about managing your student loans. We also have information specific to financial wellness during COVID. We just thought that was a really important thing to help people with, especially if you were in a situation where you lost your job, or you knew someone that lost their job and they had to manage their student loans, or maybe they needed to think about credit repair. All that information, anything that would be helpful for you during this time. The other thing that's really great about Maine, except for the fact that, of course, we just love living here, that's why we're here, we have a service that's provided free student loan counseling for Maine borrowers through ECMC. And so they are a fabulous resource that works with our Maine borrowers. And again, just making sure you have the information you need for successful loan repayment. So definitely take advantage of ECMC if you haven't. It's completely free. It's provided for in conjunction with Fame. Mary did a fabulous job getting that service here for Maine. And then the Institute of Student Loan Advisors. We almost got it, Mary. We were a little off. It wasn't student loan advice, it's student loan advisors. So their website is freestudentloanadvice.org. The pandemic website that I provided earlier is also their website. That part of their website focuses on pandemic relief information that you might want to have related to your student loans. But then generally speaking, you can go to them with any information or any questions you have about your federal student loans. So just some additional resources that we hope you find helpful. What we'll do after this webinar, we will actually share the actual PowerPoint with all of you. If there are any questions that we need to answer further, we'll do a Q&A in an email and make sure we send that out. And then the other thing that we've been doing with our monthly webinars is we've been putting together some monthly tips. So 3 tips that kind of connect with what we've been talking about on this topic. So we will email out next week are 3 tips that will be related to managing student loan repayment. So we hope that you find that helpful. So I'm going to pause and see if there were other questions, Mary.
No other questions, Martha. I think we've covered it all. The one thing I might add is just, you know, as all of the chatter and conversation, and it was really heated up a month or so ago around student loan forgiveness, widespread student loan forgiveness, just a reminder that when that dialogue and in the media and all of that sort of begins to heat up again, if it does, just a caution that that's a time when student loan companies come out of the woodwork and are offering, you know, opportunities for forgiveness for a fee for students. And there's a lot of scams out there and a lot of predatory companies that sort of seize upon that whole concept of forgiveness. So just for those of you who are working with student borrowers, to keep that in mind, that, you know, as, you know, the feds start to talk about forgiveness, or if it comes up in the media, that is a time when we tend to see a lot of attempts to, you know, convince students that they're eligible for forgiveness programs that don't actually exist. So I think reaching out to servicers, reaching out to FAME, you know, all of the great resources that Martha has provided, that's where you want to direct students, not to some of the alternative sources that are out there.
Yeah, that's actually a fabulous point. You're right. The more the chatter heats up in the media, people will take an opportunity and make you believe that you have to pay for something that's either completely free or doesn't exist. So yeah, definitely stick with your own loan servicers, or call FAME, or call TISLA. You know, there's plenty of us out there that can help. So, well, I really thank you all for spending time with us today. We definitely welcome your feedback. So if there are items you wished we had talked about that we didn't, or things you would like us to expand on in the future, I've often thought that we could do a public service loan forgiveness as one whole webinar session. So maybe that's something we'll explore for the future. And who knows, maybe I'll go back into my son's student loan account and do all sorts of screenshots and just redact his information so we can walk you through what things like that look like too. I'm sure he doesn't mind. So again, thank you so much. I'm glad you could join us. We'll send this out to you next week, and then also watch for our tips. And then we'll take the summer off. Not really, we're all going to be working at FAME, but we won't be doing any financial check-ins during the summer, but we will start up again in the fall. So everyone be well and have a great weekend. Bye.